going to go ahead and get started. Our webinar this morning is on the process for taking a custom system or an idea for a system, a trading system, and programming it in the system tester, and then we'll kind of go over some of the steps for optimizing the system. So we'll just go ahead and get started on that. Okay, I've just got MetaStock Pro 13 Power Console open here, so I'm going to go to the system tester. Excuse me, I'm going to actually start with a chart. So I'm going to open up a chart of the symbol SPY, which is the S&P 500 exchange traded fund. I'm just going to open that up with a clean template. I'm going to tile that so we can see it better now. Now the indicator that I want to take a look at for developing a system is the equity put call ratio. And to plot that on the chart, I'm going to come up here to the insert menu. I'm going to say insert instrument. The ticker symbol for that is .RTOE .U. And we want to insert that into a new inner window. Okay, so now we have our equity put call ratio plotted. Now what I want to do is, my indicator is not the put call ratio itself directly. It is a 21-day moving average of the equity put call ratio. So we'll go ahead and plot that. Notice that when I dragged my pointer onto the screen from the indicator quick list, I moved it over the put call ratio plot and watch for it to change color, and then that way I know that that's what I'm plotting it on. So we'll just put in 21 in there. We're just going to make this a simple moving average. So we'll click OK. Merge with scale on right now. I want to actually move this indicator into a separate window. So I'm going to drag that up there so we can see it a little bit better. And we'll just kind of make this window smaller. And looking at this, if anybody's familiar with the put call ratio, you'll know that it's a pretty common sentiment indicator, and or at least a moving average of the put call ratio, and that can be measured many different ways. Right now we're just going with the 21-day. Oh, by the way, my name is Merrill. Had an attendee asking about my name. It shows that I'm logged in as Kelly Clement, but my name is Merrill Manfull. Okay, does anybody have any questions so far? All right, then I'll just go ahead on and continue. What I'm looking at here is that as this moving average of the put call ratio makes peaks and troughs, it can indicate turning points in the market. And the ratio is basically the measure of equity puts divided by equity calls. So when the number of put puts are rising, that tends to indicate the market going down. And when the number of puts have fallen and fallen to a low level, that's generally coinciding with the market rising or topping. So what I want to do is I want to build a trading system based on those parameters. So looking at this, we can see, like, if we go right here to this peak in the moving average of the put-call ratio, and I look down here, we can see that there's kind of a market bottom there. And then if we come down here to this kind of bottoming out area, we notice there's the market topping out. And over here we see the same thing, a very low point in the put-call ratio just before a market top, and then a peak in the put-call ratio average coinciding with the market bottom. I have the same thing going on here. There's kind of a peak there before a top. Excuse me, but when this market bottom here is not very deep, but there is a little bit of a bottom there. And then we have down here, we have a bottoming in the put-call ratio just a short time before a market sell-off. So now we have an idea for a system. So we want to test this out to see how well it will do. So now we can go to the system tester. And I'm just going to click New to open my system editor. And I'm just going to call this 21-day put call ratio. In the notes field here, I'm just going to make a note of what we need for this system in order to build and program the formula for it. So we need the data for the put-call ratio. And then we need the moving average for it. Let me just make sure that we are describing that good enough. That's a 21-day moving average. Now I'm just going to go ahead and click OK to create the system, and I'm just going to go back to the chart here for a moment. And I'm looking at this and I'm thinking, now what indicator or study can I use to determine the peaks and the troughs, or the bottoming out and the topping out of the put-call ratio? And there's a lot of different ways that this can be done, but I think a quick and easy way to do this is to use some kind of a band indicator. So we're just going to go ahead and use Bollinger Bands. So I'm going to plot Bollinger Bands right on that. And again, note that I'm putting the mouse directly over the put-call ratio moving average as I'm plotting that indicator, so we know that that's what it will calculate on. And I'm just going to make sure we're set for the default parameters for the Bollinger Bands. Let's go and Let's just make those a different color so we can see what's going on there. So I've made the Bollinger Band, the upper band and the lower band blue, and the equity put-call ratio average is still showing in red, and you can see that it does a fairly good job of touching the moving average when it's peaking and troughing. It's not perfect, but it catches them a fair percentage of the time. So that's what we want to kind of test, is how good is using the put-call ratio, and how good is using the Bollinger Bands as a way to catch the highs and lows of a moving average on the put-call ratio. So now we'll go back into the system tester, and I just got my system right there at the top of the list. So I'm going to click Edit. So we have our 21-day moving average, and then our Bollinger Bands on the 21-day average of PC ratio. Okay, does anybody have any questions at this point? All right, then we'll just go ahead and continue on. So we'll start with the buy order formula. And I'm just going to go with our first item that we need, which is our data for the equity put-call ratio. And to get that, we're going to use the security function. Now what I'm going to do to make it a little easier is to create a variable to get the data for the put-call ratio. And I'm just going to call it PC. And then we need to use a colon equal to set a variable. And then we go ahead and we write our formula to load the data for that, which is just the word security followed by an opening parentheses, open quotation marks, and then we type in the ticker symbol, close the quotation marks, then a comma, and then a data array field, which in this case we're going to use the closing price, and then we close that with the closing parentheses. And then to terminate the variable statement, we just use a semicolon. So now everywhere in the formula that I have the letters PC, the data for the put-call ratio or whatever I have in my security function will be calculated at that point in the formula. So now we have the first item that we need for our formula. So then we'll go on to the second item, which is the 21-day moving average of that. So then we'll just start with, excuse me, I want to go ahead and create a variable for that as well. So we'll just call that PC, oops, looks like we accidentally deleted what we had done before, so I'm just going to quickly go ahead and re-enter that. apologize for that. So now we're going to go ahead and do our moving average variable, which is, I'm just going to call it PCMA. And again, we use the colon equal, and then we'll use a moving average function, which is MOV, open parentheses, and then now because I'm using the put-call ratio as the data for that, I just put PC right there. Then I use a comma, and then 21 for our number of periods, and S, which is short for simple. If I wanted to use the function table for that, I could click Functions here, and I get this function table that opens up. It opens up to indicators, and I could just go down to moving average, and it tells me right there the structure of the moving average function. The first parameter is the data array, then a comma, then the number of periods, and then all the various types of moving averages. But since I already entered it, I'm just going to cancel this. Okay, so that gets us what we need for our 21 period moving average. Okay, so then the next thing we need to program is what we're doing with the Bollinger Bands. And we basically want to know, for catching a top in the moving average or a peak, we want to know when the Bollinger, or when the moving average goes above a Bollinger Band upper band and then begins crossing back down below it. So to do that, we're going to use the cross function. The cross function checks for one data array crossing above another. And the syntax for that is the word cross, followed by an open parentheses, and in this case we want to check for, because we want to check for the put-call ratio moving average crossing below the upper Bollinger Band, we're going to put the upper Bollinger Band function into the cross function as the first data array. I'm going to use the function table to load that. Right there we have Bollinger Band top, so that makes it very easy. And in our format we can see that it's just B band top, then our data array, and then the periods. The default periods for those is 20. And then the smoothing type, which is simple. And then our number of standard deviations, which is 2. So we'll go ahead and paste that in there. The data array that we're putting in there, remember it's our put-call ratio moving average, so we're going to type PCMA, and then 20 for our number of periods, S for simple, and 2 deviations. That completes our first data array for the cross function. And the second data array, again, that's just our put call ratio moving average, so I'm just going to type PCMA there. And then we close it off with the closing parentheses. Okay, does anybody have any questions so far? All right, then we'll go ahead and continue. This basically completes our formula for our buy order, or for entering the market long when the put call ratio moving average reaches the upper Bollinger Band and then begins crossing down below it. For our sell formula, we know that we need mostly the same data. We need the put call ratio data, and we need the moving average of that. So rather than type that all over again, I'm just going to copy those, highlight them, and then press Control C, or I could right click and choose copy. I go over to the sell order and I paste them in. And then we're doing the same thing as we did, not exactly the same thing, but a similar thing for our cross function. Only we're going to look for the crossing of the put call ratio moving average above the bottom Bollinger Band. So I'm going to click Functions. I just come down here to Bollinger Band bottom. Double click. Now, because we're looking for the moving average, the put call moving average to be the one crossing above, that has to go in as data array 1. So that is actually what we enter in the first part of the cross function. So I just type PCMA there, close it off with a comma, and then we enter our information for the Bollinger Band bottom. And we need to have one more parentheses there. So now we have our buy order and sell order formula entered. So we'll go ahead and run a simulation on this to see what kind of results we get. So I clicked OK, and now I'm back to the main screen of the system tester on the Power Console, so I'm just going to click Next. I enter the symbol SPY, click Next. Now since I entered only a buy and sell order, for now we're just going to do long trades. And I have the last 1,250 records in here, which is about 5 years of data. And we'll go ahead and click the trade options to see what we have selected there. I'm just going to do this as a points only test. Under broker, I'm going to leave all the the margin settings at default. And I'm just going to leave the commissions at 0. Even though those will obviously be a factor in any trading system, I'm going to leave those at 0. Okay, we have a question from George asking what a points-only test stands for. Basically, a points-only test measures all the performance of a system strictly in terms of point changes. So if the system says to go long and it goes long at, for example, $100 a share, and then if the stock or the security rises to $105 a share and that position is closed, then it measures 5 points. We're not factoring in equity. If we were doing an equity test, then the profit would be based on how much equity is used and how many shares that equity could have purchased. But just to keep things simple, we're going to stick with the points test. Okay, let me go to the trade execution. Oh, let's see. George wanted to know if points only can be used for futures. We actually recommend points only for testing on futures because the margin and equity requirements are different for futures than they are for stocks. By using a points only, then you can multiply the number of points by the dollar value per point and the number of contracts traded to calculate your profit and loss. Okay, under trade execution, for trade price, we're going to just leave things as the default, which is realistic market prices. And that just means that with daily testing on daily data, you would be entering the positions at the next day's open. So that's why we have our buy and sell prices. And if we were doing short trades, they are all entered at the open with a delay of 1, meaning that you enter the position at the open of the next day. Slippage, I'm just going to leave the slippage settings at 0 for now. Trading something like the SPY or any derivative of the S&P 500, such as the futures or the E-mini futures. These markets are very liquid. You generally don't find a lot of slippage with them. Okay, so I'm just going to leave the slippage at 0. We have the close all positions on the last bar setting checked, and we could uncheck that if we wanted to. For now, we'll just leave that checked. And we are not going to do a quick test. A quick test stores only the summarized results. Doesn't store results about orders or positions. But we do want to have that information, so we're going to leave that unchecked. So I'm just going to click OK on that, and then we'll start the test. And now we have our results. Okay, the system, let me just maximize that so we can see it a little bit better. System tested daily data back to September 30th of 2009. So roughly about 5 years. The number of points of profit is 53.78. Total number of trades is 15. So it's not producing a large amount of signals. We had 12 profitable trades and 3 unprofitable trades. The average profit about 5, well, just slightly under 6 points, and our average loss is almost the same. So the profit is coming from the number of profitable trades being greater than the number of unprofitable trades. Now, looking at this, I can see that if I had bought and hold the SPY, I would have made more. So we want to know, is there any way to improve this system? We obviously made money trading this system, or could have made money trading this system, but it wouldn't have beaten buy and hold. So let's just go back and make some changes, and we'll look at optimization to see if that can improve the system in any way. But before we do that, maybe we'll let's see, George, we have another question about what is the most important figure to look for on this page. I'm not sure that there's one specific thing that's most important. I think obviously your profit is important, but I prefer to look at the total number of trades, because obviously more trades means more commissions. The ratio of profitable trades to unprofitable trades, which is favorable, we have 12 versus 3. If it was the other way around, even though the system made money, it might be a little hard to have all the profits coming from 3 trades and 12 losing trades. And again, you know, our primary purpose here is to concentrate more on programming the system rather than going through a detailed explanation of system testing. We will be happy to answer any questions about that through our normal support channels, though. So I'm just going to go ahead and we'll close these results. Now, I actually beforehand had already created this system and tested it and also did some optimization on it. So I'm just going to go down to the system that I have already optimized, and let's take a look and see what I did here. So we'll just click edit on that. And the only difference between what we did earlier and what I've got here is that the number of time periods in the Bollinger Band is being optimized. Optimization, for our purposes, optimization is just varying the number of periods, or varying a parameter in an indicator to find the best or the optimal. 20 periods is the default number of periods for a Bollinger Band indicator, but how do we know that that's the best number for this particular indicator and system? Maybe there's one that's better. So optimization helps us answer that question. So coming over to the buy order, what I've got here is OPT1, which is short for optimization variable 1. So if you want to optimize a parameter, you basically substitute whatever that parameter is for an optimization variable. And since we're just using 1 in this case, we're using optimization variable 1. So I have that here in the buy order and in the sell order formula. Now when you enter these into a formula, it turns on the optimizations feature. So you come over here to the optimizations tab, and this is where you have to set the optimization parameters. And what I did here is I told it to start with a minimum value of 15, remembering that our default is 20. I'm telling it to start at 15 and go to a maximum of 100 with a step of 1. So that means that the system tester is going to plug in the value of 15 for the Bollinger Band periods, test it, then it's going to plug in 16, test it, 17, and so on, all the way up to 100. It's going to produce, I guess, 85 different results. Now, if we didn't want to do that many, then what I could do is change this step to a higher number, let's say 5. So then it would start with 15, then go to 20, then go to 25, and so on. Does anybody have any questions about that? Okay, so we'll just go ahead and we'll switch this back over to 1. Click OK. And then we'll click OK on our system editor, and we'll go ahead and run a simulation. And you can see that the result is that we get several possibilities now. Now, if you recall, back on the system options, there was a setting to show a number of optimized results. It's actually show the X number of most profitable results for optimized tests. So the default for that is 5. So that's why we have 5 results here. And the best result was 57.34 points, which was not a whole lot more than testing our default value. The number of trades was 17, 13 profitable and 4 losing. Average profit was 1.35, and the optimized value that produced that was 22 periods. So we weren't really able to improve it a whole lot, but what this tells us is that maybe that particular system using the Bollinger Bands on the 21 period moving average is already a fairly good system, and at least on this particular security, there isn't really a whole lot of more improvement that you can get on it. So does anybody have any questions so far? Let's have a question from Bob, wanting to know if this system would be valuable if it's not beating buy and hold. I personally wouldn't trade it if it doesn't beat buy and hold. George is asking which is more important out of column 2 or column 6. And there's probably not a right or wrong answer to that. It's just It's more up to the user and or the trader, whatever whatever you feel is more important. Sometimes you'll test a system that can show a very high net profit, but that profit may have all come from a small number of trades. So this average profit or loss, or the trade profit and loss ratio, might not look so good. I personally, I would probably want something that shows good average profits per trade and has a high ratio of winning to losing trades, as opposed to a system that it generates a profit off of just a small number of trades. And let me just also go back and make another point about the optimizing. Let's just go ahead and edit our system again here. We only optimized one parameter of this system, which was the number of periods in the Bollinger Band moving average and band calculations. We could also optimize this parameter, the number of moving averages in the put-call ratio. Excuse me, the number of periods in the moving average on the put-call ratio. And we could also have optimized the number of deviations in the Bollinger Bands. So even though we only did one parameter, there are more possibilities for optimization here that could improve the system. Okay, we have a question from Jim asking if we can optimize multiple variables at the same time, and yes, you can. If I wanted to do more than one, then I keep OPT1 in there as it is, and then I can just add, I can do another optimization using OPT2. Why don't we go ahead and just test out optimizing the number of deviations. So I'm going to enter OPT2 there. Go over to our optimizations tab, and we now see that we have OPT2 listed there, so we'll edit that. We'll make a minimum of that 1 and then say a maximum of 2.5. And we're going to do our step on that as 0.1. Let's go ahead and see what that gives us. Already so far we can see that it is giving us better results than what we did previously. We have another question from Bob asking if you can optimize stops. Yes, you can. And you can only do that in MetaStock Professional, though. MetaStock End of Day does not have the ability to optimize stops. And then can you optimize strategic delays? Unfortunately, you cannot optimize strategic delays. You can optimize numeric parameters in any indicator, and in MetaStock Pro you can optimize your stops. So we're almost finished with this simulation, and And then on our results now, our best result on that was 71 points. Still not quite as high as buy and hold, but getting a little bit closer. But again, we have more trades this time, but we still have a fairly good ratio of winning to losing trades and a good average profit. And then if we were going to trade this system, then these are the optimized values we would use. We would use 17 periods in the Bollinger Bands, and then we would use 1 deviation. Oh, we have another question from Bob. He must have saw that I had written a test on the volatility index, the VIX. It basically was a test of highs and lows in the VIX. Didn't really show good results. So that doesn't mean it's not a good market or sentiment indicator. What I did with it, there's probably better ways to work with it, but that's basically what it was. Okay, if you've got any more questions, go ahead and type them, and then we'll go ahead and wrap it up. Okay, Bob's asking what trading systems in our library do you like that have good results beating buy and hold and would consider for our own trading? I would prefer to answer that question by email. It's a little bit of a broad question. So if you want to just drop an email to us, support@metastock.com, we'll be happy to take a look at that. George is asking for market sentiment. Is the volatility index or the put-call ratio better? Again, that's kind of an open-ended question. Depends on how you interpret them. I think they're both very good market sentiment indicators. I think using both of them. The volatility index is a little hard to nail down. It's basically it kind of stays at a certain level for a certain period of time, and then it spikes really high. So it's hard to capture a systematic way of measuring it for trading. But knowing where it is, I think, is kind of more important. And then you kind of would have to use other things for determining when to buy and sell. I would suggest maybe researching those. We don't really like to give our opinions about the market or about which is a better system or not. We're mainly here to show you how to program a system. Personally, I do follow the market, and I do like looking at the VIX and the put-call ratio for what I follow. They may not be good for what others follow. And then Bob is asking, how can we contact us? You can just drop an email to support@metastock.com, and we'll be happy to answer any emails about what we've talked about in the webinar. Also, just to note that the webinar has been recorded and we will be made available on our website. sometime in the next week or so. The site to go to is youtube.com/MetaStock. If you want the exact link, just drop us an email and we'll be happy to provide that. Okay, we want to thank everybody for joining us today, and again, it will be available on our recording on YouTube.